Hey everybody, welcome back. Thank you all so much for taking the time to support the channel and joining me here today for this GameStop daily review. What we'll see is an options overview. Where is the current day's volume at and how is that lining up with our open interest over a multitude of strikes and expiries? Going through our technical analysis on our multiple time frames, starting, at the 1 minute, working our way up to the 1 day, discussing our IV, cost to borrow, utilization, going through the ENVX warrants timeline a little bit more in depth today, which is nice. You'll see that on the top portion of your screen. Bed Bath & Beyond has announced a similar warrant dividend, which is interesting, so we can touch on that really quickly and monitor it as it plays out and give a quick recap on that situation, how it all played out as it went into bankruptcy and came back. And, earnings was so good. How can we, uphold that standard moving forward? Well, future catalysts, Grand Theft Auto, touching on an old deal with Microsoft for a percentage of those digital sales, right? So we'll see the game coming out on consoles first and then on PC a year later. So we're not totally up to the consumer's discretion, whether or not they like physical copies or not. Many of them, I believe, still do, as we've seen the PlayStation 5 disc variant sell out. So, kind of going through that a little bit more. And Webill and Wall Street Simps is putting out some price targets discussing the dangers of mainstream media. And also a cat hair today, as well as, a cat hair, as well as some cat errors. Oh my gosh. Not going too much into that. We've got a lot to cover, and I want to respect everyone's schedule. If you want to help out, leave a like, drop a comment, subscribe to the channel for more GameStop content. And of course, we always do our daily trade review as well. I know that's not as popular, but it's really just a way for me to hold myself to the flame for the review, because it's so easy just to not do it, put it in the past, and you never really improve upon your skill set that way, right? So you need to come back, take a recap of your own trades. What could you improve upon? What went right? What went wrong? All that, right? So that's in another video. We also have another channel, Hello Good Game, where we play Magic the Gathering all day, every day for like the last 6 or 7 years. So, I'll stop by, play a little card game. We'd love to have you. With that being said, let's talk first and foremost about our options chain, which looks pretty good. We continue to trend above max pain, which has moved up to 25, which is quite nice. Going through our weeks as quickly as we can. We're seeing today, some 26s, which is great, as we are at 26.78 currently, up 2.7% on the day. A lot of 27s is cool. A lot of 28s is cool. No 29s. That might be a recurring theme here. That is a little worrisome to me. Lots of 30s. That's okay. So we don't like those gaps between the strikes, as it gives the opposition a chance to flip the hedge back against you. And because there's no support here, it's just resistance. So you want those incremental supports as you break through each resistance. However, that can change day by day and is a big reason as to why we're monitoring the chain. Looking at the open interest, lots of 26s, lots of 27s, lots of 28s, 29s, Omega 30s, and even, which I like to see starting to build up, is these 33s and potentially even 35s here, which is a little close for an expiry, but a lotto's a lotto, and if it's gonna go, it's gonna go. Good luck, everyone. But yeah, so our read on this really is, if we can hold 26.5, then we can look for 26.9, maybe 27.4 or 27.8. If we clear 28.5, then 29, obviously 30, we can tug at. Again, I get a little nervous here, as a rejection is possible at this point. If we're losing 26.5, we're obviously going to be drifting back towards that support at 25 on the lower band of the daily gap. And of course, we're going to go through our technical analysis after the options, try to overlay these two on top of each other to get a little bit more of a clear picture, and then stacking, of course, any potential catalysts on top of that for even further conviction. Okay, moving forward to October 3rd. Da, 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 da. We have a ton of 28s, ton of 30s. Some even in the money now, which is fun to say because it's at 25 and 26. Some 27 puts. You get out of here. I hope you get melted. Just kidding. Those are probably fine. Expecting again, maybe a change in the state of delivery midweek, fill the gap, and then hunt Max Payne into the close. I don't know. We have to wait and see, right? So open interest here, a lot of 22 puts. I don't think those are going to do too well. Big base at 25, holding us at support, and that incremental support at 26, at 27. Love to see it. 28 is really nice here as well, but we're missing 29 again, and then there's that big chunk at 30 with even ramps building up into that 35, 40, 45, which is no joke. That's serious price territory as far as I'm concerned on a very closely dated contract. Typically, I would say throwing money to the wind, literally setting it ablaze. However, we've got a catalyst. The technicals also look good. I wish the best for anyone taking these. I don't know. The IV is a little low as well currently. We'll discuss that in a second to be selling contracts. However, to each their own. Our read on the third, I guess I should go through. We got that 3-week coil, basically 25 to 30, and that 29 is going to be the staggering run, as mentioned earlier. Moving in to the 10th, dips to 24, 23.5 could meet put support. Upside needs to flow to rebuild that 28, 29 mark here. Today we see a lot of 25s. That's really good, can help us. The 25 puts are maybe not great that they're rolling in, specifically when we overlay maybe some mainstream media, which I am quite suspect of. There's always an alternative motive, at least in my mind. A lot of 26 fives, which is nice. I love to see every strike hit, and that's where we do get a healthy ramp. As I've said this how many times now, is where there's those gaps, it's easy to swing back as the support is not there where you need it to be, and the next wall will act as resistance. So those 26 fives here, awesome. 27s, great. No one's touching 27 fives, 28s, no 28 5, no 29. Again, we're back with 30s. No 28 5, very little 29, but there's some. That's nice to see. These 22 fives, good luck on those. I just would not want to be an owner of these. And I do think that when some of these, because obviously a lot of these calls are going to expire out of the money, but these puts are as well. And as we move forward, deleting these puts off the chain, as they're definitely done, in my opinion, again, we can move up as a lot of that downwards pressure is relieved and continue to just hold the support that remains, right? Because it's not like they have all these puts at 26, right, where the price will go to and they're still valid on the chain. Because these are not going to be relevant, I think, for much longer, and specifically at expiry. I don't think. Maybe the price swings around and those puts print. I don't know. I don't think that these are necessarily new either. I believe that these have been there for some time on the chain, so they're probably already fairly cooked. Again, moving forward to the 17th, which is our monthly expiry. It's our OPEX. So a lot of volume here. A lot of it's a little bit older, which means it's probably cooked, but it still remains on chain, which is important considering we've seen probably a lot of this being loaded up at that 23, that 24, and now all of a sudden we're at 27, and the theta decay that has taken place has been kind of made up for with the improvement of its delta. So things looking pretty good here. Honestly, I like to see the 17th here and have been liking it for some time. Our largest call tower at 30, a lot of open interest here, right? So if we can get there and get above that, maybe with something, so this could potentially act like a really nice support like those 20s did for a long time, right? But for now, resistance. Unfortunately, it is what it is. These 25s are going to be holding us up indefinitely, which is nice to see, and that gives us a chance, as we've now accomplished at 26, 27, and now maybe we can get to that 28, 29, 30, hopefully 31, 32 mark, and then use that 30 as support. Our quick readout on this, though, will be that 30 is our gatekeeper. If we can break past 30, then it's going to, like I say, open up 31, 32. Rejections here going to snap us back to 28 because there's nothing at 29 to catch us, unfortunately. And then moving on, the 24th, this is a newer chain, so there's not a lot of volume here, but we do see some 28s building, which is great to see. Feel free to buy some 29s as well, but 28s first, obviously, and then we'll get those 29s next. And again, this is a big reason as to why we are looking at it every day. Obviously, this isn't a ton. It's only 1,000, and it's a newer chain, but they're there. Again, these 23s just kind of weighing us down. Not that they are going to print for whoever sold them, so it's like a losing play as far as I'm concerned. I don't know. Like, even if someone's selling these puts, there had to have been a buyer for them, right? So I don't know. Moving on, the 31st here is, again, a little bit lighter, right? There's nothing happening here. It's a new date that's just starting to build out. Very light on the volume, not really even worth looking, but it is starting to build, is the thing. So we want to start to track it. If we could just fill in, this 28, 28.5, 29, 29.5, even 27.5, I suppose, then this would start to be looking tasty, just to kind of get these spikes up a little bit and fill in the valleys if possible. I understand that the liquidity is bad, and because of this, people are unwilling to take those intermediate strikes, the 50-cent marks. The spread on them is not as ideal. So your entries and exits are going to be suboptimal. I understand that, but technically speaking, I would like to see them there. Moving out to November 21st, again, not much here, but it's starting to build a big chunk at 30s. A lot of 27s, a lot of 25s, that's nice to see. And it even extends out past 30. So that's interesting, right? Kind of the danger zone for GameStop above 30. We've seen those bonds roll out around 32, right? So that's interesting. We also have the warrants with a strike at 32. So getting past 30 into that 30 to 40 area, and of course the bonds have that auto exercise clause for 20 or to 30 days above 37 something. So definitely an interesting area to be in if we get there. Moving on to the leaps, we see a bootload of 20s. Are these exercised? Are these rolled out? Were they bought? Were they sold? What's going on here? We're going to have to wait and check the open interest tomorrow to really get a deeper understanding of that. I would love to see, them just kind of roll these out, get the 20s, maybe at 27, right? And then we could just kind of walk these further dated contracts up underneath of ourselves as that long-term support. Cool beans. The readout for this, puts have a heavier down stack, 24. Bullish long-dated skew, though, however, with far out of the money towers. These are pure lottos. I wouldn't necessarily be going for those. And if you do get them, you have to be selling them on a green bar. You're never going to hold these to hit $125. You want to have GameStop spike up one morning 30, 40%, and then you drop those immediately because it is a Vega or a volatility play, right? So you definitely want to take advantage of that massive bar in the morning, and you don't want any consolidation because that's not volatility, and that it's going to trend those down really aggressively. So if you are playing it, that's how you have to play those, but just don't is the thing. Just buy in the money contracts always. And so support 26 area, for sure. Pivoting above that potentially, which we are, which is nice. And, the potential rejection at 29 as we test 30 is going to be interesting. If we can get above it and reclaim that, then 31, 32 is definitely in the cards, and potentially even like 35 late October, just by looking kind of at the options chain, in my opinion. Again, I'm not the brightest bulb, but we've been doing it a while, and with some success, I may add. Of course, always room for improvement though. IV pricing up, 54% low, 16 percentile rank. Lots of room to go up. And, we just got such nice entries on our recent batch of options contracts, if anyone took them, with such low IV that, it's at a price where, okay, gains are good. We might want to start scaling out. And we typically would, but the IV is still so low that there is a lot of room for these contracts to grow as we approach the ex-dividend date, October 3rd. It's still 2 weeks away. We have this whole trading week. We have next whole trading week, which I think it's on the Thursday. No, it's Friday. But you'll need to have all of your shares bought by Thursday the 2nd, before the 3rd, which is a Friday. And, just exciting times to go through. I do think that a lot of people are waiting to buy that new options chain when it comes out. I know that the old chain has the warrants attached to it, and they could be potentially in high demand. But from what I can tell, the liquidity on the old chain will be a little bit light in comparison. Again, that might be different because we're in a unique situation. However, I think a lot of people are, playing by the textbook, and they're waiting for the new chain to come out, at which point then they load in there, as it will have better liquidity than the old chain, which is, a tighter bid-ask. It's better entries, so you're not entering a contract because these contracts have like sometimes aggressive spreads. So, you don't want to enter a position at negative 10 or 20%. You have a lot of way to go to just get break even on that. So to have good liquidity is typically important as an options trader. However, as the price trends upward and these contracts flip in the money, that's going to self-correct, right? Which potentially could happen, and I think we're seeing that unfold. So IV on the rise, utilization is chilling, borrow rate is chilling, shares to borrow is chilling. I thought that would move. It is not. That's fine. We're going to continue to monitor that. We have the GameStop earnings came out with the Switch 2. They were really good, which is a big part of why we are where we're at. So looking forward, how do we kill these other earnings? Because the Switch 2 is not going to come out every quarter, which is a bit of a bummer. Looking forward to the biggest catalyst that I can find. It's going to be Grand Theft Auto, right? A lot of people downloading the game digitally, unfortunately. However, GameStop has the agreement with Microsoft for a percentage of that. This is awesome. Maybe we could extend this to Steam, extend it to PSN or the PlayStation Network as well, potentially, as we'd be in a great position to maybe negotiate that better than we were before. With that being said, I think discs are still in high demand. There was like the Stop Killing Games movement, and now we also have, before that actually, we had the PlayStation 5 disc drives sell out, right? Those were in super high demand as well. So, maybe everybody just goes and buys a disc. If you do download the game, try to do it on an Xbox that's ethically sourced, of course. But if you know of any, or can think of maybe any other future catalysts, of course, maybe we get the new Xbox, a new PlayStation coming out eventually as well, but nothing on that front currently. And I don't think like the ROG handheld is really going to be that big of a seller, not like the Switch by any means. Moving forward, we could potentially sell Steam Decks. I don't know if they're into that or not. Maybe they already do. I honestly don't. I live in Canada. I couldn't tell you. So yeah, just wanted to retouch on that if anyone was unfamiliar, right? Because you hear that argument a lot that, digital sales, but, we're still involved a little bit. The specific terms were not disclosed, at least in this press release. Of course, if you have that inside information, let us know. We'd love to know that. We discussed the options chain already. Bed Bath & Beyond announces warrants, ex-dividend date or the record date, October 2nd, and then distribution date, October 7th. A 1 to 10 out of the money warrant. Sound familiar? Well, it certainly does to me. I got burned by Bed Bath & Beyond, all honesty, before. I'm sure many of you did as well. Jake Freeman, you're on my list. No, I'm just kidding. It was unfortunate, right? The shares literally deleted from my brokerage. Overstock buying the IP during the bankruptcy filings, renaming it from Beyond back to Bed Bath & Beyond. And, well, we're here with the warrants now as well. The stock's not trading great, but we'll continue to watch it just for the sole purpose that it's relatively related, at least by proxy with the warrants, and just see how the strategy plays out as a whole, right? On that note, we have a comparison of ENVX to go through. Before that, I suppose we should talk about Webull. $120 price target. Sure. And we also have Simping for Wall Street, a $35 price target. So that's a little bit more realistic, honestly. I am very skeptical of mainstream media. To me, it is a liquidity siphon. So just like Jim Cramer, when they are looking to sell something, they need a buyer. That's you. And the same goes when they're looking to buy something, they need a seller. That's also you. So you'll see, these inflated price targets when they're selling, right? Because that encourages you to be a buyer. And then you'll see, these hit pieces when the price is quite low and they want to buy, but they need a seller, which, so a little leery of all mainstream media, of course, because of this. Personally, to me, I don't think it's your friend. However, I understand, you find entertainment and information where you can. So that's Webull. I would take it with a grain of salt. They're citing incorrect financials as well. They misinterpret the debt. They say zero long-term debt, but the bonds are debt. So there's some fundamental misunderstandings here. And yeah, that's just the day we live in. It's way too easy just to be like, hey, ChatGPT, write me an article on these things. And it will, write me a DD on these things. And it will do it so confidently. And if you don't already know those facts, if you're just learning them for the first time, you're wrecked. But if you already know them, it's a little bit easier to pick out the inconsistencies that are there, which exist, unfortunately. And this is becoming more of a problem as we progress. I do like this a little bit more, though. 35 seems much more reasonable. Again, though, this site is selling memberships, and if you can pander to a specific audience, specifically one that is so passionate, right? You do very well. And we've seen a lot of these organizations spring up because of that. Unusual Whales comes to mind, for example, of old, which is still around and doing well for itself. So it's okay. I'm just a jealous bee. But, it's on that note, whenever I hear someone say the phrase ape, I'm like, Control, Alt, Delete, you're done. But this is just a stigma that I should try to get over. But it's the serial contrarian in me. Very suspect of almost all information, specifically having been involved in this for so long. However, you can check this out. It's pretty cool. I was thinking maybe we could come back with some better competitors. I added eBay. I added Best Buy. I added Newegg. Maybe we could get a couple other ideas for industry competitors for GameStop to really start comparing it against those. But that's in another video. The warrants. This is pretty interesting because ENVX had the warrants come out. One thing that is different, though, that's going to make a big shift in my hypothesis, I guess, is that these warrants were issued in the money. The price was at $11.50, and the warrant strike price was at $8.75, right? So the entirety of the time, even when the announcement hit, the warrants were already in the money. And what do you do with something that's in the money? You exercise it, right? On that note, we as GameStop investors are still waiting for the terms and conditions. The ENVX terms and conditions had an early expiration clause, right? Based on the price being above $10.50, I think, for 20 out of 30 days, right? So we still are waiting for that information, and that could very much determine the course of actions that we'll need to take. On that note, everybody's trading path is different. We'll try to do like a few different scenarios, and then maybe you can build off one of them for yourself. Everybody's got a different average, different goal, things like that, right? With that being said, different risk management as well. The warrant announcement to the peak the day after the ex-dividend and the day before distribution was 41%, right? So that's an extensive run. That's no joke. And then as soon as they're distributed, we see price retrace aggressively so, right? And again, I think that's to do with them being in the money, with them being exercised immediately. As soon as people got them, they're like, okay, let's exercise these, which is dilution. Now, if you're exercising them yourself, you're maintaining your percentage ownership, but the float is still diluting, unfortunately. At which point there's the earnings drop. And on that same date, they gave out a reminder for the early expiration, which did not help things, right? So they had that gap down. Then they let everybody know that the early expiry was met, the condition, and they put out the date, which was the next day, which was aggressive. So you get another drop down because of that. And then later on, another gap down, 300 million offering, I guess, is relevant to mention in case you're wondering why it went down further on that second gap. However, looks like a lot of people bought that offering, and it looks like it's retracing back afterwards. So we're back at the early expiration price of 10.50, basically, after a trip from the announcement, basically at that price, 10.50, all the way up to that 16.50 area. So nice price improvement, but a massive retracement, which one would expect post-dilution, as I suspect these warrants were exercised the moment they were distributed, okay? Now, that's going to be a little bit different for GameStop because our warrants are out of the money, and I don't think people are immediately going to exercise something out of the money, right? Why are you buying a share at 32 when you can buy it at 27, okay? We may be above 32 by that date. Now, that's a different story. Now we're back to looking at ENVX for inspiration. However, currently, it's a little bit of an inconsistency, right? So that's what we've got going on there. Let's talk about GameStop. Technical analysis. There's not much changing here, kind of leaving it to the end for that reason. First out of the gate, from our warrant announcement to a matching 41%, because that's always how it works, we'd get $32.50, which is an interesting price, considering that's where the bonds were offered. Of course, let's keep in mind that it's not just the options chain, it's not just the warrants, but we also have those bonds, which, again, force convert at $37.50 for 20 out of 30 days. Of course, as we climb to that, the short arbitrage hedge needs to be adjusted and most likely unwound. Additional buy pressure. So there's a lot of different angles to this playing out, which is amazing. I love it. We just need a tweet, right? If not, I still think we're looking good. So technical analysis on the day, we see a lot of buy pressure right in the morning, and then, to basically hold trend and track over for the rest of the day. Quite a boring afternoon. GameStop's really hard to trade on the 1 minute. It's even hard to look at on the 1 minute. The 5 minute, consolidating all that noise a little bit. And this is typically, the GameStop investors, right? They're so excited over the weekend that I'm going to hit the market Monday with my buy order. And they do, right? They stick to their word. And, I think it's a good time to be doing that. We think back to Tesla days, and there was once a time where lots of people made plenty of money just buying weeklies because Tesla was in a long-term melt-up, and it literally, you didn't know how to play. You didn't have to know how to play options. You could just buy a weekly on Monday and sell it on Wednesday and laugh, right? And then repeat the process the next week, right? So hopefully GameStop kind of gets to this area. We could potentially do more option education as well. One of my favorite books, 1,000 pages of pure goodness. Now, you won't need to read all 1,000 pages, but the first couple hundred would probably be helpful. If you want, you can also get that book online for free. But however, I do hope that one day we get to an area where you won't need to know anything and you can just kind of follow the herd. Of course, only with profits. We don't want anyone to be risking the house on that. Aside from that, let's zoom out. Let's go to the 15-minute, and we basically see a wicked bull flag here forming. Let's see if we can break out from it and kind of do this staircase every day, holding that 200 as our support on the 15-minute. Nothing really here that I'm too concerned about. The 30-minute, even better. So now instead of breaking the 200, it's hard support, right? Still our 21 and 50, basically bullwhipping. We don't care too much about that. I do want to mention, I don't know if the 30-minute is a good area to do this, the consequent encroachment, or the CE of the one-day gap, the 50% mark, which is the draw on liquidity or anchor point, magnet, if you will. Look at how it rejects. Once, twice, 3 times even, and then today we break through. So we want to take this, what was resistance, and now turn it into support, which is the way of things. And hopefully what happens, and then we can fill the gap to the upper band, at which point, overlaying the options to this, I think that's why we see that dead area around 29, is because a lot of traders are only targeting 28.5. So why buy an option that would be out of the money, right? You want your option to end in the money, so go as high as 28. The price goes to 28.5. Boom, you're closing out at the top of the gap. We will most likely reject the top of the gap because a lot of traders will be taking profits there. Now, that's just how things work. Retrace a bit, and we continue to show strength, break through, right? But I would expect a retracement on that upper band once it fills. It might break above, but still it should come back into it before we go. And again, that resistance can eventually become support, just like we've done now with our consequent encroachment. What is this? Our 30 minutes. Let's go to our 1 hour now. Similar story, just a little bit more condensed. I like this a little bit because we see the EMAs not reversing. They come close, but then expand out again. So basically just looking for that to hold and to hopefully not have them reverse. Once, like if this 21 or light blue / teal crossed over the navy blue, the 50, that's to me a bearish reversal signal. And I wouldn't like that, right? So let's just not have that happen, and we can move forward. This is the 1 hour, which is fairly substantial for those reversal signals. And the 1 hour, nice for that. The 4 hour, having the 21 acting as just clear as day trendline support, right? 1, 2, 3, 4, 5 taps and expansions upward. So just like how we want to see those on the 1 hour stay separated and not reverse back, we just want to see the price stay above the 21 on the 4 hour. We have a break of structure here off today, which is super duper bullish, creating ourselves a bullish order block. Potentially, we see price retrace and expand outwards. What we don't want to see is an invalidation of this order block and then a retrace into it and a breakdown further. That can happen. We take it day by day, minute by minute, truly, with GameStop. Happy to recap all of that for you. If there's anything in addition you'd like covered, don't hesitate. I need to incorporate Kitty's indicators here. We did go through them in other videos. The PMO, the MACD, the RSI, the SPY, GameStop comparison. The reason I don't is because I don't use them every day to day trade. I've been, a day trader for the last 4 years now, and I'm very comfortable with my current setup and conveying all of that information to you. There will be few false positives with indicators that I don't have, thousands of hours of experience with. I could get it wrong a few of the times, but we should still put them up learn. Once we do get to the upper band of the gap, that's when I want to start looking at the RSI for it being oversold, right? So we'll see. Moving on, that is, the cat errors. So we see those in options currently. From what I can ascertain, when they've been in options, we see a retracement in price. We've only seen that once before, though. So, does it stay true? It's going to be hard to say. I think any assumptions surrounding the cat errors are potentially coincidental at best. Correlation is not causation. Just because you get an average or a median of past results, it doesn't necessarily mean that the two are, affecting one another in the way that you think the relationship works. So it's fun to observe, but specifically, we've seen right out of the gate a difference between the options errors and just the stock errors. But again, I've not dove into that a whole bunch because of that. Today's video has already gone a little bit long. Just be aware of that difference, I guess, is what I mean to say. And we'll maybe touch on it more tomorrow, as we won't have the warrant situation to really go through and some free time. So on that note, if there's anything I missed, anything you want to discuss, hit me up in the comments. I hope you have a great day. Feel free to share your favorite song. I'm building a playlist for those squeezy days, right? And if we do ever squeeze and make like a 30% plus move, I'll jump on. We'll do a live stream, and then I can give you live technical analysis to help out, right? Specifically if we do start making those big moves upwards, right? So cheers, and I'll see you soon. Take care.